Very good evening to everybody. Webtel, as you are all aware, is a software company which is in various compliances. We are pioneers of TDS and XBRL softwares in the country, and also various other solutions. And we have a team of professionals led by CAs, CS, and various legal and software professionals. Next slide. We have also partnered with the government for various initiatives, and we have a bouquet of products like Virtual Office, which are websites for CA firms, which a new offering, which is a mini ERP for CA firms. Also, various TDS, income tax softwares, or a combination thereof, which is Goldmine, and WebSign, which is for digital signing of documents, etc. So we have a bouquet of products, and our latest addition to that is a work at home solution, which we proudly call as WA. And in this pandemic situation, I think we all have faced problems in working properly, and because offices are not fully functional. And let us see this. Social distancing is a new norm in the unprecedented situation. Stay home, stay safe. While safety is a big concern, how long can we wait for the situation to become normal? How to keep working while taking necessary precautions is a challenge for everybody. We need a utility to let us work at home. What is WA or work at home? WA is Webtel's new utility which allows access from anywhere to Webtel, Calibusy, etc. other servers to virtual server in data center in India, available 24/7, and it also has an option to static IP in on-premise server. Now the question would be how WA works. Let us see. Get server access through WA. Softwares like Tally, Busy, Webtel, etc. installed on the server only. Only WA installed on employee PC, no need for other softwares. Employees can get anytime, anywhere access to softwares on server, and access to user as per need to use basis. WA work at home solution for everybody to help you work. And this is how you will work. There will be a central server either on your premises or on the cloud, and each one of you can access the system server through your own homes, and it will be as if you are working on a LAN environment. Such good speed with necessary hardware solutions and the Webtel solution. A small step by Webtel for safety and security of your clients and the staff. Now this QR code is there, which you can scan on your mobile phones if you want to know more about WA utility. And already many of our CA friends and advocate friends, other professionals have already started working from home, and on a very limited basis they go to offices and they are able to work at home using WA utility. So you can use your mobile phones scanners to scan this QR code and know more about this WA utility. I'd like to introduce Bimal Ji, though he does not require any introduction. CA Bimal Jain is executive consultant at A to Z Tax Corp LLP and has around 25 years of experience. He's a qualified CA as well as CS. Further, he also holds a bachelor's degree in law. His core competencies indirect taxation, international taxation, and corporate taxation. He carries a blend of industrial and professional experience. His accolades include Business Leader Award from Amity School, Noida, Best Speaker Award by NIRC, and Young Achievers Award at Igniting Minds 2015. He's the mentor of Indirect Tax Committee of PhD Chamber of Commerce, Chairman of Corporate Advisory Committee of IPM Group of Institutions. He's also a member of IDT Committee of SOCHM and FICCI, and a member of GST and Service Tax Committee of ICAI and ICSI. He's an eminent faculty of ICI, ICW, and ICSI. He has also authored a number of books on indirect taxation. So right away, we'll give the mic to Bimal Ji. Welcome, sir.
Thank you very much. Good evening to all the participants, and thanks to organizer inviting me for today on deliberation on supply, understanding and intricacies. At the outset, let me wish each one of you happy CA Day, happy GST Day, and happy Doctors Day. Now, the topic is supply. I was just while ago on ICSI platform, and they are celebrating GST Day today. Sri Piyush Goel ji and Sri Sushil Modi ji was there. And even in panel discussion, I was having panel discussion with Prakash Kumar ji, CEO GSTN. I was asked one question, and this question I'm, throwing away to all the participants. See, in GST, we all know that we got into GST with the big bang. It's the biggest indirect tax reform since independence. 17 indirect taxes merging into one basket with 23 cess. Lot of pre-GST compliances subsumed in GST. We know that cascading of taxes, tax on tax, credit was not available. That is also gone. Double taxation. A particular transaction was chargeable to service tax and VAT, both together gone in GST. A supply can either be supply of goods or supply of services in GST. And one nation, one tax from Kashmir to Kanyakumari. I normally say GST law is a Gita, Bible and Quran, irrespective of any language, religion, race and caste. This is what the GST background, but the topic which is given to me, I can tell you it is 100 years of practice now. 100 years of practice is my betting to all of you. See what happened. Central excise was applicable on term manufacture. Manufacture is being defined under section 2 subsection F of Central Excise Act 1944. But term manufacture is not settled as yet. Still we get debate, litigation in the Supreme Court whether activity undertaken is a manufacture or not. Now look at the term supply, which is a taxable event. If you look at chargeable section 9 subsection 1, or if you look at section 5 subsection 1 of IGST Act, chargeable section says GST applicable on supply of goods or services. So what is supply? That is important. And that is the topic which I'm going to discuss with all of you today. The way term supply is being defined in GST law under section 7. It says supply includes without saying what is supply. So term supply left open for individual interpretation, subjective definition, and they have not defined what is supply, subjective term. When this is subjective term, next question will come. This goes further, supply includes. So first subjective term, then includes, and then say it includes all forms of supply of goods or services or both. Now with this line, do you want anything else to be covered in this definition? But no, this definition goes further as if Bimal Jain has not understood the definition and says such as 8 exemplary terms are being included: sell, transfer, barter, exchange, licensing, leasing, renting, disposal. 8 exemplary terms, but let me clarify, none of the term is defined in GST law. Something which is included as exemplary terms and not defined in GST law, then giving third rider, first the subjective definition, second the inclusive definition, and in the DOIPEC, Apex Court judgment, Supreme Court said, whenever any term says includes, it makes its meanings wider. And 8 exemplary terms, none of the term is defined in GST law. Made or agreed to be made for a consideration. Consideration can be monetary, and non-monetary. By a person, but there is no reference of to a person, meaning thereby even self-service can also be supplied in the course or furtherance of business. Fortunately, it is being stated in the course or furtherance of business. So what is the meaning of term business? So I'm just starting that this supply, which is taxable event in GST, I'm going to tell you this is 100 years of practice. Let me take one example and let's start with, and we can go down further. We can discuss number of other examples as well. Let's say a particular, I'm a mobile supplier. I'm supplying new mobile phone to the customer. Now, some customer coming to me and he is purchasing a new mobile worth 24,000 rupees. But he's exchanging with old mobile phone. So he's giving his old mobile phone to me and paying me 20,000 rupees, and I'm giving him new mobile which is worth 24,000. This transaction is what? Exchange, barter, and then the valuation. If I ask this question, valuation, I'm sure you will all say 24,000. In the hands of supplier who is supplying new mobile. What happened in the hands of customer who is giving me old phone worth 4,000 rupees? Is it in the course of furtherance of business? You need to really analyze all these problems. And whenever you look at this transaction from 9 subsection 4 perspective, which is not there as on date, but it's a big issue. But this is not in the course of furtherance of business in the hands of customer. He is only giving his consideration in cash and in kind. And that is how GST law needs to be evolved from the term supply perspective. I said consideration can be monetary and non-monetary. Let me take one more example and discuss with all of you. Let's say you wanted one opinion from me. I gave the opinion to you. This opinion normally going to fetch me 50,000 rupees. 50. Had I given this opinion to any independent party, it would be 50,000 rupees. I'm creating 3 situations for you. And why 3 situations? For getting better understanding of GST so that you will get a clarity what I'm referring to. So what is the clarity I want to pass on? The first situation. As against 50,000, you're not giving me any consideration. You're not giving me any consideration. Or I'm giving this opinion without consideration. It is in the course of furtherance of my business, but no consideration charge. GST leviable? Answer is no. Unless there is consideration, it is not a supply, GST not leviable. Exception. Schedule 1. If we are related parties, then this is chargeable to GST even though without consideration. So entry 2, schedule 1, supply of goods or services or both between related person or distinct person in the course of furtherance of business, even without consideration, GST leviable. First part. Second part, you have no money to pay me. I have raised the invoice for 50,000 rupees. On accrual basis, I have deposited the GST to the government department, which as a customer you have not paid to me, and it becomes bad date, full bad date, complete bad date. What happened? Being customer, you have not paid me the value, you have not paid the GST to me, and on this amount, I have paid GST on accrual basis. What happened? Is there any relief which I can get as a supplier? You must have heard of credit note in GST. And credit note can be issued under section 34. There are 4 situations prescribed. If as a supplier, I've charged the higher taxable value, as against the actual value. So as against 100, I have made 120. Or I have charged the higher taxes, 20 as against 18. Or there is return of goods. There is no return of services. And last, when there is deficiency in goods and services, credit note can be issued. Now this situation, where being supplier, I paid GST liability on accrual basis. You haven't paid to me, my customer haven't paid to me, and this is being deposited. Do I have any mechanism in GST to net off this GST which I paid from my own pocket? As per law, there is no mechanism. No mechanism for return of services. But there is one jugaad. Why I'm saying this term supply is going to be 100 years of practice, believe me. And I'm giving all subjectivity to you. And what is that jugaad I'm referring to? Which may be out of GST, but can help me as a supplier to adjust my GST which I have paid on accrual basis. What I will do, I will come back to you and request you, boss, you pay me 1% by check. 1% by check. I will repay you this 1% in cash. So whatever you pay me by check, I will return you in cash, and then I will design this particular transaction as a deficiency in services so that I can adjust GST which I paid on accrual basis. Coming to the third component of same transaction. Now you are a respected customer. You say, Bimal, money is not there with me. I can't give it to you. I've got one watch. And this watch worth is 20,000 rupees. 20,000 rupees. You take this watch. I will not be able to pay you 50,000 rupees. Now tell me, you have given me watch, which is in-kind consideration, worth 20,000 rupees. Is GST going to be leviable only on 20,000 or 50,000? Next question to all of you. We have to go back to transaction value. And transaction value means the valuation for chargeability of GST. It said it should be transaction value, price paid or payable, when buyer and seller, supplier and recipient are not related, and price is the sole consideration. Price is the sole consideration. If these two provisions are being satisfied, then GST leviable only on 20,000 rupees. If supplier and recipient are related and price is not the sole consideration, and looks like this price is not the sole consideration. Looks like this price is not the sole consideration, because this opinion would have fetched me 50,000 rupees as open market value or like kind of goods or services. I need to go back to GST valuation rule. And GST valuation rule says, rule 27, Bimal, if you are unrelated, but price is not the sole consideration, then GST going to be leviable on a value which consists of monetary consideration and monetary consideration of in-kind part. So need to be added back. So in this given example, when price is not the sole consideration, valuation becomes the issue. So term supply is not individual way to look at. You have to look at supply from holistic perspective. Then only you will come to know what is the term supply means. Now, having said supply, next question to all of you. You give me 50,000 rupees advance today for giving opinion at a future date. For giving opinion at a future date. You know, advance against supply of goods, no GST, effective from 15th November 2017. But advance against supply of service, GST leviable. Even though supply is not made, it is in terms of time of supply provision under section 13, GST leviable. So what happened? GST discharge on advance money received by the supplier, and a receipt voucher is being issued. Now, repercussion could be, if services rendered against this advance receipt, then you're going to raise the invoice, and GST charge on that invoice can be adjusted with the GST paid on advance money. But if service is not being rendered, what you can do, then there's a refund voucher concept. Am I right? A refund voucher concept for adjustment of GST. So GST not only banking on supply, it is banking on so many other provision, and you have to really check all other provision for the chargeability. So this was the example I given to you. Let me go next step further. I said there is a schedule 1 for specific entry, even though no consideration, GST leviable. The first entry says permanent transfer of business asset, where ITC credit has been taken. ITC credit has been taken. So I'm a company and I'm giving my laptop, 50 laptop, which is used for 3 years, to some NGO, and without consideration, whether GST leviable. If I look at this entry 1, permanent transfer of business asset, where ITC credit was taken, even though without consideration, GST leviable. If I change the example, let's say I purchase motor vehicle, I'm a company, for transportation of my employees, CFO and CEO. Now I'm giving this car to some NGO without consideration. Whether GST leviable, GST not leviable. For simple reason, ITC credit was not taken. But if some consideration charged for this motor vehicle sold, then GST leviable, and this motor vehicle not your business, but still it will be considered in the course of furtherance of business. I'm just highlighting and making things more interesting for you. Schedule 1, entry 1. Entry 2, schedule 1, very much interested, and it is debated as on date for cross charge versus ISD. So you know that if I'm a head office and I'm having a 4 plant, and let's say I'm having 4 plant in same state, in pre-GST, for 4 plant, I need to have 4 separate central excise registration, even though they were in one state, in same state. In GST regime, this was done away with. They say now you can take 1 registration within the state for your multiple unit, unless you look for separate registration from business vertical wise, and this business vertical provision got changed to different place of business from 1st of February 2019. So it is at my option. I can take separate registration or within 1 registration. If I'm taking 1 registration and stock transferring from A unit to B under 1 registration, no GST, then they are not distinct person. If we have taken separate registration, then we become distinct person, and then stock transfer made from A unit to B unit, GST leviable. Had there been 4 unit in 4 different states, then there's no concept of 1 registration. In pre-GST, 4 central excise registration. In GST, again, 4 separate registration. And being separate, under same PAN number, they become distinct person. Hence, stock transfer of goods between distinct person, GST leviable. Only point comes valuation. On what value GST going to be leviable? Rule 28 says that valuation can be either open market value, like kind and quality, or you can pick up that proviso which talks about that the supplier can pick up 90%. of selling price of recipient unit at which he's selling the goods to unrelated person, same goods. So 90%. If recipient unit is selling at 100 rupees, supplier can take valuation at 90 rupees. And there's another provision which says that if recipient unit is eligible to ITC, input tax credit, whatever value declared by supplier would be considered as a deemed open market value, So this two proviso you can interplay and check how these can be applied. Now, but for services, this cross charge is hue and cry as on date in the industry. What is this cross charge? Let's listen carefully. I'm a service sector, and from service sector perspective, this is becoming very critical. I'm having head office in Bangalore, and I got 6 branches in different states. In my head office, my CEO, CFO, my common HR team, IT team, accounts team is sitting. With any stretch of imagination, can you say that head office is giving, supplying any services to branches? And this matter was raised in one of the advanced ruling, Columbia Hospital, which is upheld by appellate authority also. And if you look at the provision of entry 2, schedule 1, there is supply of service between distinct persons. Even though no consideration, GST leviable. Next question will come. What is the valuation? On what value GST going to be levied? Then you can always use this proviso, second proviso of Rule 28. If recipient is eligible to avail ITC, then supplier can even pick up ₹1 for cross charge to the recipient unit. Possible, and that ₹1 would be considered deemed open market value. Problem will come only when recipient is not eligible for ITC. Maybe they are engaged in exempted services, healthcare, education, exempted. Then what happened? Can I pick up this ₹1? Answer is no, not possible. Because recipient in that case is not eligible for ITC, burning issue. But now what is the valuation then? So valuation we have to look at head office, total cost. So total cost may be divided into 2 components. One is the salary component of CEO, CFO, common HR team, IT team, and accounts team, and other costs is overhead cost, total overhead cost. With the salary cost need to be included in total cost for raising cross-charge invoice to distinct person. We are having divergent perspective from different tax consultants. Somebody will say, without including salary cost, it is not a total cost. And somebody will say, why I am going to include salary cost? Salary, which is neither a supply of goods nor supply of services. In terms of entry 1, schedule 3, why I am going to include it? Is it not taxing something which is directly not taxable? And in case of exempted sector, healthcare and education, if I include salary cost, it will add cascading. And 3 years gone in GST, we are enjoying GST day today, celebrating GST day today. Government has not come forward to explain what would be the valuation method in case we are talking about exempted sector. And therein, this dispute lies even as on date. Coming to the next part, within this supply definition, there is schedule 2. And schedule 2 only means for classification. Classification, either a transaction is a supply of goods or supply of services, but cannot be both. This double taxation, which was there in pre-GST, is being done away in GST regime. It can be either supply of goods or supply of services. Now this schedule 2, which was there under section 7 subsection 1 clause D, is being done away with, retrospectively amended. And what is retrospective amendment? Schedule 2 now only going to determine classification, whether a transaction is a supply of goods or supply of services. But it is not a supply till the time it is satisfying 4 corners under section 7 subsection 1. So what is the conclusion coming out? That schedule 2 only going to be used for determining classification. It is supply only when it is satisfying 4 corners of provision under section 7 subsection 1. Then only it is supply, otherwise not. Having said all this part, next thing comes out from schedule 2, liquidated damage. Liquidated damage, whether per se chargeable to GST. I am of the considered opinion that liquidated damage per se is not chargeable to GST. Non-compete fees, which is one of the transaction, money consideration for non-acting, and liquidated damage are 2 different things altogether. Any contract, see, whenever liquidated damage are being given, it is being given to compensate the opportunity loss or loss incurred on that account. This liquidated damage are being given. Do we have entered in a contract to make mistake, contravene the law, and contravene the contract and pay the amount? No, we never intended to. We never get into such kind of contract. We normally go into the contract for supply of goods or services. These penalty clause entered into the contract only for creating compensation, where loss can be compensated. This was not the intention for the supply. And to my mind, liquidated damage per se cannot be really chargeable to GST. So it is falling in para 5E of schedule 2 as a supply of service, but not supply. And we can always debate on different factual position that GST not leviable. Coming to schedule 3. Schedule 3 having 8 specific entry. That is neither a supply of goods nor supply of services. Recently, the Gujarat advance ruling coming in, and in that ruling, what is being decided that I'm registered in India. I got some customer in US, and he wanted a supply of particular goods. So instead of sending goods from India to US, I have identified customer in Korea, South Korea. I will not identify now China. I will identify my vendor in some other countries than China. So I got vendor in South Korea, who is a supplier, has supplied goods directly from Korea to US. Korea to US. Now in this transaction, I would be having purchase inward supply, bill to. So Korea vendor going to bill to Bimal Jain in India, and then Bimal Jain going to invoice, sell invoice to US customer. In that advance ruling, it was asked that on purchase, which is my inward supply, invoice raised by vendor from Korea to India, whether GST leviable. Fortunately, advance ruling has given good judgment saying that no GST. Because till the time goods entered into custom frontier of India, no GST. So no custom duty, including IGST, fortunate part. But what happened for my outward supply, sell invoice from India to US? money is coming also to India. With the GST leviable, Advanced Ruling Authority has said this is a kind of transaction in the import-export scenario, and hence interstate supply, IGST leviable. And this judgment is the recent judgment, and para 7, para 8. 3 transactions: merchant trading in third country, high sea sale, and inbound sale, when goods are being stored in a custom bonded warehouse. Para 7 and para 8 included in Schedule 3, effective from 1st of February 2019. This provision was existing when this ruling was passed. To my considered view and my humble opinion, this is not chargeable to GST, not chargeable. Even though, had it not been entered, had this para 7 and para 8 is not entered into Schedule 3, even though this transaction is not chargeable to GST. Can you charge GST which is affected in a non-taxable territory? Then you're just making aggression, getting beyond your power, taxing something which you can't tax, to my mind. And next, when we talk about that this merchant trading in third country, high sea sale, inbound sale, let me tell you what is high sea sale. Let's say I've imported something at $100. When my goods on high seas, not entered custom frontier of India, I sold the product to you at $120. You are the person who is going to file bill of entry for home consumption. So what happened in my hands? I have purchase of $100, sell at $120, whether chargeable to GST? No. And what is inbound sell? I imported at $100, stored my goods in custom bonded warehouse by filing inbound bill of entry. And when my goods are stored, I'm selling to you at $120. And you are the person who is going to file export bill of entry, then you will pay custom duty, including IGST. In my hand, not chargeable. So these transaction para 7 and para 8 entered into Schedule 3 transaction from 1st February 2019. To my mind, even though it got inserted from 1st February 2019, but it is only, can be said, it is with retrospective date, 1st July 2017. And why so? Because when some transaction which is being clarificatory in nature will always have retrospective date of implementation. That is what my argument, and we got subtle legal jurisprudence that any tax, any change in taxation law which is clarificatory, benefiting to the taxpayer, should always be read from retrospective date. And to my mind, even though inserted from 1st February 2019, but applicable from 1st July 2017, I differ with that particular advanced ruling of Gujarat. Having said this thing, that para 7 and 8 of Schedule 3, when my outward is not taxable, next question will come, what happened for the ITC, GST input tax credit? My outward is not taxable. Am I allowed to avail credit? Or am I supposed to reverse credit common ITC? Then I would like to draw your attention under section 17, subsection 3.
Bimalji, I would like to interrupt. You can please conclude in the next few minutes. Other speaker is...
2-3 minutes?
Sure.
I will not take more than 2-3 minutes.
Sure.
I do understand half an hour dedicated given to me. I will not go beyond that.
No, we would have loved to hear you for the rest of the evening, but there are other speakers as well.
Not an issue. Just 2-3 minutes more.
Thank you so much. Yeah, sure.
So what it is being stated under section 17, subsection 3, that for exempted supply for reversal of common ITC, Schedule 3 will not be considered except para 5 sale of land and building. So even the outward is not taxable, but still credit is available, advantage to you. So as Rajeev ji has already alarmed me that the other speakers are really waiting in, but for me it is an opportunity that they have invited me at this platform, and my special thanks to Star ji and Rajeev Khandelwal ji for this evening for discussion on supply within half an hour. Whatever best I could have presented on term supply with the practical case studies, I tried my best, whatever I can give it to you. And with this, I can wish once again happy CA Day, happy GST Day, and happy Doctors Day. Wish each one of you great success. Do take care of yourself. COVID-19, struggling and tough situation for all of us, but keeping positivity, passing positivity to each one of us. Share positivity and try to make best of this COVID-19 time period. Thanks for watching. Thank you very much.
Thank you so much, Bimalji, for the wonderful deliberations, and you made it in spite of your busy schedule today. So thank you so much, and you have really given a wonderful deliberation.